Hello everyone and welcome to another lesson. So this is a continuation of the last video. So if you didn't watch the last video, please watch it because it's very important. So this time we are talking about auction shift. So the auction shift is when the market decides to shift cycles despite past price and despite not having a change of character. So last time we saw change of character and break of structure. We said that we do not enter until we have a change of character, which means that we need to pay attention because a reversal could happen. This is good. But here the auction shift is something else. It adapts itself to the present price action. So when we are talking about price action, especially with change of character, it's visible by all participants. But when we are talking about auction shift, is something that is less visible and could be a reversal sign. We are going to talk about why this happens in more details when we are going to the chart. So before we talked about price action being that way, which is a perfect image of price action going like this. So we have our change of character. We have our break of structures here, here, and here. Then we have our change of a character, and then we decide if it's really a change of character and meaning a reversal, or it's just a trap to just continuing up. But here, there will be something else happening in some examples, which is, for example, let me copy it the same way. So it would be like this, like this. Then in here, something else would happen. Instead of going like this, we are not having a break to the low. We still not broke the low. Great. But now we just have this. And this is a very different case. So every time in the past, so if we cut a line here, sorry for the line, it's hard to do it with a mouse. We have a past price and we have the present price. And here we are looking at something very different happening. So in the past price, each pullback is having a similar time. It's not it can be a little bit different, maybe here 9 bars and here 10 bars or 12 bars or whatever. And then suddenly we have a difference, a big difference, where price is doing something unusual, something it's very visible in chart. You will look at it and you will know something is different than before. Here, everything is the same. Then suddenly we have something different. And this is the auction shift. And when we are seeing something like this, it means that the dominant side is either running out of aggressive participants or the opposite side is absorbing that liquidity and make it harder. In other words, this is a fair value where both participants are seeing something. They are both fighting for price. They are both transactioning in this price. And it means that we are entering into a smaller range, but that range in itself is a sign of reversal because it means that we are not anymore in this aggressivity where the buyers were dominant and they were aggressive and the time was shorter, meaning they won in a short time. But here it's longer. It means something has shifted. The aggressivity is not out there anymore. There is something happening. It doesn't mean that we are going straight down or straight up, but it means we need to pay attention in here the same way we paid attention when we had a change of character. When we had a change of character, here the difference is that it's a little bit the same way, the price moves the same way, the same time, but here we have a lower low, meaning that the buyers weren't that aggressive and the sellers won in this place. This doesn't mean the next buyers or sellers will be dominant the same way they were dominant here, but we need to pay attention to this price because it is the best place to buy and ride the move. So let's go to the chart and see it in a more detailed way so you can have an idea. So first of all, let's see the break of structures and see the change of characters, and you will see the difference. So here is a break of structure, here is the change of character. Great. Here is the next point that we are waiting for a break of structure. So in here you could see what I'm talking about. Price having a smaller move in time, but suddenly we're shifting into something different. We were very aggressive, the sellers were very aggressive, but suddenly they are not anymore. If we are using the replay button, so in here you will see that we have this impulse, this pullback, a break of structure, and if we are going to have the same aggressivity as here, it would be like this. Great. This is intended to do if there is aggressivity as before, the same aggressivity. But now we are looking that we failed. We didn't have that aggressivity that we have before. Something is different. And now, when we are having this thing, there will be other rules that we need to use. The first rule is, if you saw our last video, when we had the lesson about market structure and the breaks and the type of breaks, I've talked about 3 types of breaks. The close, a candle that close, a candle that have a hard close, meaning a whole candle closing above, breaking above the line or below the line, depending of the direction. And I've talked about the candle having a break with a wick. Sorry about that. How can I do that? I can't. Okay, I will do like this. A break with a wick. And I said in the last video that I personally, depending on each person's risk appetite, I use the wick for that change of character. But here is different. Now we are talking about an auction shift. And an auction shift is still not confirmed with the change of character. So it's more likely riskier than a break of change of character. So in here, I use personally the close. So you could also use the hard close or the wick depending on your risk appetite. But in here, I strongly advise to use the close or the hard close because it's more a micro decision than a macro decision. Great, are you following? I hope so. So in here, well, now we're looking for a break of structure. Now we are not looking for a change of character, we are looking for a break of structure. And in this time, we're going to enter on a break of structure. So let's say this is now the high, and we are looking for this side type of things. We are not looking down anymore. It doesn't mean that price could go down, but when it will reverse or fail, we will enter in this time too. So pay attention. So in here, we're looking for a break of structure. So we are waiting for it. Either price here will just go down, and this, all of it, just means that there was a resistance from the buyers, but in the grand scheme of things, the sellers won the battle, even though it was clearly a shift of auction, and this was the fair value where participants agreed on this price, but it failed and the sellers were again dominant, and it was just a continuation. In that case, we are going to just wait for price until we have a sign of reversal, since we are entering on reversals, not continuations. We are going to just enter into a continuation in just one case. If we had a auction shift, then a sign of reversal, meaning the break of this break of structure, the break of structure of that auction shift, if we had a break of it and then failed again, meaning a break, if this is a break of structure, what is this? This low. That would be a change of character. Then if it breaks, meaning we are going to enter into a change of character, meaning a continuation into a macro decision, but it is a reversal into a micro decision. So let me just remove this thing. I hope this is not confusing. I try my best to make it as clear as possible. So in here, we're going to wait. Here we have our break. Great. It is also with a fair value gap, which means there was an impulse, a clear impulse of buyers being aggressive and winning this auction. And also we have, and we have the break of structure. Great. In this case, sorry, not here. This is change of character. But in this case, there is a difference. We are only having signs of breaks when we have a hard close or hard close. Great. So even here, just to make that a short point, even here, we need to have a close or a hard close, not just a wick. The wick is in other decisions that I showed in the last video. In here, it could hold this line. It could hold something in between that we called an area of interest in the last video. So we are looking for an area of interest, which I said it was a micro structure break or something, meaning you could enter here, or you could enter in the fair value gap. But in this case of our auction shift, it could even go to the low here and have a wick or touch, maybe here or here in the base or in the low, to then reverse. Because this is micro, candles can easily go down to here. You need to pay attention to that. It's not a macro price. Macro price will have many candles and it's unlikely to touch that low, and when it touches, that's a change of character. It's a clear sign of reversal, of potential reversal, sorry. But in here, we could easily have a candle that will touch this line to then continue. So just to make that sure point, so you don't find surprises. So in here, sorry, let me delete all of this stuff. Come on. Great. So in here, we are going to enter in somewhere in between this line and this line, or you can decide on entering on the low or something in between, which we have here a fair value gap, which is a sign, something to use. So in here, we are going to lower our stop loss because we could touch this line to then reverse. Our target would be the next change of character, then we could either just exit in here or wait for a bigger move. So let me delete this. And in here, we're going to continue. Price touch the fair value gap. We entered. We have another break of structure. We had finally our change of character, because this is macro. This is a change of character now, just with the wick. For me personally, you could wait for a close, meaning it will reverse pullback. The buyers will obviously absorb the liquidity to have a better price and eventually go higher, which is in this case beam. We have, if you waited for the close, here you have it, a pullback to an area. It could be the market structure here, or it could be this fair value gap, which is in here. Then it just continued up, and you will have here your 1.2 hour, and if you wait, you will have maybe more, depending on your risk, a 4 hour. So here we saw that we have a auction shift, then we had a continuation, meaning a change of character. You could have entered here and somewhere here, but your R will be less substantial. And now we could see something happening in here. So we had our break of structure, and we have our change of character. We can see that all of our pullbacks are 2 to 3 candles. 3, 3, 2, and here 3. Great. Meaning that we need to have something like this if we are following the same cycles, the same aggressivity, the same participants, the same dominant side. But something happens here, and that's more candles happening. Great. So here we need to pay attention to the micro side of structures. We could have a break of structure here, which happens, meaning that we can have a reversal in here. If you are going to reverse, obviously it would be either the low, the break of structure, either the high, either a line, something happening between them. Here in this case, we don't have anything happening between them. Also, this low is very close to our break. And thirdly, we don't have any fair value gaps in here. We don't have any pulse. So this is a little bit riskier. But because it's riskier, we are going to enter here and have our stop loss somewhere higher in this side or this side. So we are waiting to have a pullback, and here we have our pullback, meaning we are waiting for the continuation, which is visible here. Great. There is also something happening in here. If you have a critical mind, you would say, here we have the same thing happening. We had a micro structure, then here we have an auction shift, something different is happening. It is not as different because we have a long side in here and we have a long side in here. Great. So even if we are going to decide there is a shift in here, we are going to see the high and we don't have any break of structure. So, and our entry is held the price. So here we are targeting this, the next, the change of character, which it was touched. But then we have a pullback. This is great example that price is not as clear sometimes. It is very confusing in times. So you don't have to focus 100% on the auction shift. You could even wait for a change of character or something happening. But this shift means something clearly is changing. So you need to pay attention. Either you don't enter in those prices like this, where there is an auction shift, you wait for clear signs, a cycle. You can see a cycle, something repeating itself. For example, if we are going to wait for this change of character, we're waiting for something that is happening, a cycle. This is a clear cycle. The same thing is happening. Here, in this example, we don't have something clear happening. It is very confusing, to say the least. You can have, even if we didn't have, obviously, we have our exit in here, if we chose break of structure, but we don't have any break of this change of character, of this low. And we have here a long and a long, meaning if we were to break this one, we could have another long. Maybe it will go, or maybe it will shift, but it's not that aggressive. We want something aggressive. So here it's very confusing. It's close to being a range. This is clearly a fair value where buyers and sellers participate in the same area because no one is actually very dominant. So in here we had a high, we had a low. We are continuing into our micro auction shifts, and obviously to reach our breakout structure, it didn't break it. This is number one. Number two is we had another retest. This could be a change of character if we had this change of character. But since we are still in the micro price action, we do not use wicks as bricks. We only use close of candle. Great. So then price went down, and now we have here a change of character, which I said it could be a wick, but here there is a very important thing, is that our break of structure, micro break of structure, didn't break. We need to have a candle here, a close here. So we need to have a close in the micro structure and a wick or close on the change of character. Here we don't have a close on the micro side of things, meaning there is a clear sign that we are having here and here and here and here signs of buyers always resisting. Do you see it? We have here, here, and here, and here signs that buyers are resisting. By the way, this is a price of action that I don't advise beginners to trade on it. If you see it very confusing, don't trade on it. Wait for change of character or wait for something very clear and visible. Here, you need to be somewhat pro to see price and the auction happening with just the candles. And even though we are just using candles, we can clearly see with that framework of auction shift and break of structure and change of character that in here we are having something. There is clearly buyers being dominant. They refused to give signs, meaning we could, either way we had our trade, we can exit this trade since we reach our change of character, yes. So our target is here, but here where in your brain you should say to yourself, okay, that is enough. I'm not holding this price to go even down because it took so much time and we are having clear signs of buyers being dominant here and here and here. So when price, so we already reached our target and now we are exiting on this noise and maybe we are looking for an entry to go up. So we are waiting, and here we have a clear change of character with a candle. We could enter this, we could enter here, or we could enter in here, or in here, or the low would be it wouldn't go to this low because it's more candles. There is more candles. This is not as short as here. It's more elongated. So we are not entering there. Maybe we would enter here or here or here or here. So price went down, touched the fair value gap, and eventually went up. I hope this was clear. This was not just a lesson, but how to read the markets. I showed you how to analyze the markets. Eventually you will not always be right. I showed you how to be adaptable with the market, how to be adaptable with price action, and how to see the auction, when to see resistance, when buyers are more strong and where sellers are more strong. And time and cycles help you see that, because candles are the results of that interaction between buyers and sellers, and we could read the price action and analyze it to see who is dominant, if there is a side who is dominant, or if they agree on a fair value, meaning there is a clear sign of ranging. In here, for example, there was a clear sign of range. We entered, we obviously saw the auction shift, and we saw that so many times we have a resistance from the buyers. We also had a resistance from the sellers here and here and here, but we had our entry, we had our profitable exit. We are not staying on that trade because it is a clear sign of range. We would only enter when we have a clear sign of price shifting again, meaning here a change of character. So when we had our shift of character, we had then price going up. You would have taken advantage of this range, but also you would have taken advantage of when a side clearly is dominant. And this is why you should never, as I said in the last video, enter on breaks. You do not want to enter on breaks. When you would enter on breaks, like here, maybe wait for a break here, or I don't know, or maybe you would have entered here on a long or here on a long. This is wrong. You enter only on pullbacks, because if you enter on breaks, for example, and it fails, or it is a clear sign of resistance and you don't see it, you are not having enough experience to see it, you would just lose money. Not only that, if you enter on breaks, price will always be very close to your entries. But if you enter on pullbacks and price went up, first of all, your stop loss would be shorter. Instead, oh, this is very confusing. Let me do this. If you enter here, let's say your stop loss is here. This is the distance between your entry and your stop loss. But if you enter here, this is the distance, meaning you risk even more and you need even more price to be profitable. But here you have low distance, but you have a big upside. Not only that, once we have a break, you could move your stop loss to your entry and you are 100% safe unless there is a crash or a slippage. But that's very rare if you trade the right instruments. But if you enter here on the break, first of all, you have this large of stop loss, this distance. To just do 1 hour, you need even bigger price, which is very unusual from the cycles. You see the cycles being like this, meaning if there is a cycle, it would hardly go even here. So your risk to reward would be less than 1 hour. Well, less than 1 hour. But if you are here, you are agreeing to price and you are doing the same thing that the cycle is doing. So please like and subscribe, and see you next time in the next video. Thank you.